Today, let's ask the question, what is sovereign debt? Sovereign debt, often referred to as government debt or national debt, is the total amount of money that a government owes to external creditors and domestic lenders. It is a critical component of a country's fiscal health and is incurred when a government borrows money to finance budget deficits, fund public projects, or manage economic downturns. Governments issue sovereign debt through bonds, which are essentially IOUs with a specific interest rate and maturity date. Investors, including individuals, institutions, and other governments, purchase these bonds, providing the government with the necessary funds. The repayment of sovereign debt typically includes both principal and interest payments. One of the primary metrics used to assess a country's debt burden is the debt-to-GDP ratio. This ratio compares the total amount of debt to the country's gross domestic product, providing insight into the government's ability to manage its debt relative to the size of its economy. While sovereign debt is a common tool for governments to raise capital, excessive debt levels can pose significant challenges. High levels of debt may lead to increased interest payments, diverting funds from essential public services. Additionally, a nation with a substantial debt burden may face higher borrowing costs in the future, potentially hindering economic growth. Sovereign debt crisis can occur when a government struggles to meet its debt obligations. This can result in a negative impact on the country's credit rating, making it more challenging and costly to borrow in the future. In extreme cases, it may lead to a default, where the government is unable to fulfill its debt repayment obligations. Governments often work to manage their sovereign debt responsibly. This involves balancing fiscal policies, implementing measures to stimulate economic growth, and ensuring that borrowing is sustainable in the long run. Central banks and financial institutions closely monitor sovereign debt dynamics to assess potential risks to the global financial stability. In conclusion, sovereign debt is a vital aspect of a nation's financial landscape, reflecting its borrowing activities and economic management. Striking a balance between utilizing debt as a strategic financial tool and avoiding excessive levels is crucial for governments' fiscal sustainability and overall economic well-being. Please note, while we may discuss finance, investing, and money on this channel, this video should not be considered financial advice. When investing or making plans for your own financial security, please seek the guidance of a licensed professional capable of making more informed decisions. If you make a financial life decision based upon the content of this video or channel, then please do so at your own volition and at your own risk. This channel and the people associated with it should not be held liable for your investment choices.